So the all-important Fed decision has now passed. The Fed delivered exactly what the market expected. It always does that. You can count on that. It kept rates unchanged. That's what the market expected. That's supposed to be dovish. It was initially, but then it says well, basically its dot plot suggested next year you can forget the inevitable 50 basis point rate cut. So that ended up being dovish, and therefore markets by the close, and that's all that matters. Ultimately, it's by the close. Markets were down, rates were up, dollar was up, commodities, not all of them, but were basically down. We'll take a look at all the charts immediately, starting with the Nasdaq, where we're at. Look at this right shoulder, which I said was going to come. Today was the ultimate nail in the coffin for me. It's closing below this ascending. I think this is clear. This ascending 1, 2, 3, 4 hits it, closes below. Essentially, we, in my opinion, guaranteed to go to the 358, 355 zone. This area here, that will complete the shoulder. Will bounce, maybe even before we get to 355. But we're going to come all the way down. Let's draw it a little bit really quickly. Down we go, little bounce, and then boom, we start to flush. The S&P, pretty much the same thing. It hasn't hit its ascending, but look at that. Close at low of day, very engulfing bearish, coincides with news. Pretty much guaranteed, in my opinion. Yes, we do have other news coming this week, but we're going to go down. And this is exactly what I've been saying for a long time. Even whilst we were up here, down we go. We're going to create a right shoulder, and we're going to flush the shoulder. And weeks later, that's looking more and more prominent. So down we go. Here's the right shoulder. It did raise itself a little higher than I expected, but nah, I didn't think we were going to make new highs here. And this, I mean, to me, we're going to go back down to 433-ish. Tomorrow, maybe, yeah. By the end of this week, yeah, probably. Little bounce. It might even be a very short intraday bounce. In fact, the moment it bounces, it could even close red and then back down and then to this ascending support. So that's the S&P and Nasdaq, very similar stuff. The Dow Jones, I mean, it's pretty much at its ascending support, but it's closed at low of day, and we know what's going to happen because of the other markets. All the markets will pull each other down. I think the Dow Jones is just going to come all the way back down to 34,000. There you go. And then flush and come back down to this area here, 33,600, let's say, just lower, in some lower. This is exactly what I was waiting for. So the day before, I did make a video yesterday, but I said, let's wait for a close below 182. We had a close below 182. It was set up to happen if the market reaction was down following the Fed. That's exactly what happened. Look at this perfectly, extremely strong bearish candle. Not only did we go to 180, we closed below 180. That's absolutely ideal for the bears. So this is, I mean, absolutely what I was looking for, especially these two levels, 182, 180. We closed below 182, we go to 180, and we closed not only below 182 the day before, but today we closed below 180. So what happens? Now we go back down to 172, along with the rest of the markets. That's a big move. We'll bounce on the way. Look at this gap here, 176. So we'll have a little back and fill. I think we're going to go lower tomorrow. I really do. Something like this, some little filling. It depends what happens in the other markets, but basically lower. Let's look at the banks, which follow the Russell more than anything, but today everything followed each other. Look at this. Look at this. This is just looking weak as hell. And this is the stronger bank ETF, the XLF, the more senior ones. I mean, I can draw multiple lines, but I just think we're going to go lower. First stop 34, then 33.5, then 32.5, and boom, 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 down we go. That's the XLF, so that's looking stronger. That's the more, that's the JP Morgan Goldman Sachs ones. Let's just forget the XLF for now, because that'll follow the KB and the KRE. It's all about these, and these have been weaker. I've followed them for a long time. I've been saying they're underperforming generally. There are some days where they outperform the markets, but look at this price action here. Look at this. I was saying we're going to close below 37, which we haven't done yet, but trust me, we closed at low of day. It's the worst close in a long time, ever since all this price action down here. What happens now? We just go back down to 35, right? Let's keep this little line, roughly 35 with the market. So as the other markets that we just looked at go lower, the KB will probably start accelerating, right? I mean, they basically go down because rates are going up. Well, rates, we're going to take a look at them now, but they're going higher, So definitely this goes lower. This is, for me, this is the black swan or a gray swan. It's kind of known. So down we go with the KVE, KRE, absolutely identical, maybe even weaker. Down we go to this 30, I would say 40 range, but I think we'll even go a bit lower than that before we bounce. So down we go with the banks. The banks are probably more important than the markets. I think they're going to drag the markets down. Although we've got some of the key tech stocks, Apple, Microsoft, not Tesla, Apple, Microsoft, and Nvidia. Those three in particular, I believe, are very weak. So I've still got my short in Nvidia. That was beautiful. I'm holding that for a move down to 400, like 407, I think is my first cover, which will be in profit finally. Actually, I'm in profit at 420 something. I'm pretty much there already, or 418. So, but all my cover, short coverage in Nvidia will all be in profit. There's no way I'm taking a loss on any of that. So I'm happy to see that. But tech stocks going lower, some of the big heavy ones, Apple, like I just said, Nvidia, Microsoft, and some others, Netflix, some of the Magnificent Seven. And at the same time, on the other side, you've got all the banking stocks dragging everything lower. So it's a perfect setup for the bears. So that's it for the markets, and the banks just looks horrible, and I think that's beautiful, well overdue. Let's look at interest rates. The 1 year, look at it. Normally I don't follow the 1 year, but you could see, the 1 year, the really short-term ones were really moving up today. Don't have the 3 months, 6 months, and all that, but 1 year usually is just sideways. But look at this. Today you can see the last 3 days, really. Look at that close up here. Close. I was looking for 5.5 close, but look at that. Close a high of day, nothing special, but it's going to start to squeeze. Let's look at the real ones, the 2 year. Boom, look at this. This is exactly what I'm talking about. Higher. Up we go, close a high of day, close at a high of the whole bear market. 5.1 close is what I was looking for, but almost at 5.2. This is just going to keep rising until something smashes, and then we have a freak out where everyone buys bonds out of fear. And then we probably rally go back up because we don't really go lower until the Fed cuts. And the Fed has pretty much poured very cold water over that idea. So rates, the trend is your friend. The trend in motion stays in motion, up. 2 year, the most important one. This is the one the Fed follows, and we're going higher to new highs. 5 year, same thing, new highs. 10 year, almost there. No, we're there. New highs. This is going to break everything. Everything's based on debt. Mortgage rates, government, corporate, student loan, car loan, whatever loan, mafia loans. It's all based on debt. 30 year, almost there. See you there. I don't know, by Friday, Monday, doesn't matter. It's true the shorter terms are going up stronger, but it's just, this is going to crash the markets. I don't know who's buying the markets. No wonder the markets look bad. They have a long way down to go. So yields up. The EU, their markets closed before the US Fed decision. So I think they're going to start to rise also. Look at that. I mean, that was pretty much yesterday's candles, if I can say that. So expect the EU yields to also start hitting 2.8 and rising. The British are a bit weaker. They'll go back up. Doesn't really matter. Up they go. Yields are just going higher. Let's look at the dollar. What do we think that's doing? Look at that. There's a bit of back and forth today before the decision. But higher highs, higher lows, nothing is broken. The steep ascending is not broken. Dollar index looks primed to start going to very gradually keep rising to test the high 105s, maybe even 106. I don't see why that will flush all of a sudden. It's again, the trend, right? Higher highs, higher lows, nothing's broken. So up we go. Every time it would rise and come back down, it would sort of retest prior resistance. Yes, you have a couple of wicks here, but we're looking at daily closes and nothing closed below. So it's just still bullish, steadily bullish. And I think we're going to start rising all the way up to 105.8. No need to say more than that for the dollar. Let's look at commodities. Commodities, copper, sideways, not bad. For the markets being down, the dollar being up. That's pretty impressive. So, but for me, copper is just stuck in a very wide range. So I don't want to add more technicals than there are. You could add some extra wedge stuff, but I think that would be false signals. So just sideways, pure sideways day, not bad given everything that's happened. Natural gas. Now, I didn't make a video the other day, but look at that pump. Look at that. We closed above 2.9. That suggested continuation. We tested 3, closed below it. I actually thought natural gas would keep going today. It went down. Not the biggest drop though. -3% sounds like a lot, but it's not in terms of a retracement. Sometimes it just retraces way too much. So I still think natural gas could go to 3.05 and squeeze. So I'm still looking for natural gas to test and close above 3, hopefully 3.05. Today is not the day, it's just a bit of a retracement. So I'm just going to say sideways, nothing special, natural gas. But it's really time to squeeze now. Enough of this retracement. Now, oil, I didn't get to do a video yesterday, but I when I saw this, I thought that's exactly what I was hoping for and predicting. I thought this descending and also this horizontal, let's zoom out to see why. I've had them in place for months, these lines, you know, obvious resistance and support here, resistance there. That's why it stays there. This descending, clearly obvious. And I said between 92 and 94 is resistance. I wouldn't be buying here. I would be selling. So it's done exactly what I predicted. And, you know, moved down, closed in low of day. Oil's looking for an excuse to retrace. I think it's chosen the markets. Markets are going lower, so oil goes lower, plus the dollar's up. I mean, it's been rising despite that, but I think now it's going to say, okay, no, I'm going to go down. But the excuse is just the markets. And I think in reality, it's the technicals, you know, it's just a bit overextended. So it should come back down to prior resistance, let's say 85. If it starts to retrace even more, then we've got the 79 zone. I don't think we'll get to 79. I think we'll get to 85 and bounce, unless the market is totally in free fall. Then it's one of those liquidity moments where everyone sells everything and then all bets are off. Charts don't really matter for such an event, but I don't think we're there yet, but we could start getting there. So I think oil will keep retracing as the market drops just to fit the chart pattern. So that's exactly as expected. Uranium, yeah, you know, ever since this candle here, Friday, you know, where it closes near low of day, much lower than its high of day. For me, that was an exhaustion. It's had a beautiful run. It's technically very, very strong. Down it goes. To be honest, I expected it to be low already, but these are just more exhaustion candles. To me, we have to go lower. I think uranium will follow the markets lower. I think first we'll gap fill, and then we'll probably keep going down. And I think the markets will start to run lower. And I think uranium, a bit like oil this time, I think those two will start to go down with the markets just because their chart patterns are too strong and they need to take a breather, and this will be the perfect excuse. And uranium and oil do have a bit of a history of going down with markets, especially when they've had a nice run and when the markets are coming down quickly. Okay, gold and silver. Now, gold and silver early on in the day looking very strong, but it's the close that counts, and we knew the Fed decision was coming. It's a shame, you know, it was looking so good, but look, rejection, the descending, close at low of day, close red, basically close unchanged, but it doesn't matter that it's unchanged. Look at the candle, close at low of day. It looks like it wants to go down. We know that rates look like they want to go higher. We know that the dollar probably wants to go towards 106, the DXY. We know the markets want to go down, but we don't care too much about markets. Gold doesn't really care about markets right now, and it can go up regardless of market direction. But dollar and yields higher, gold lower. I still think that, yeah, we'll go down with yields and dollar rising, but overall, you're going to have gold way off its lows as it is now, despite the dollar and yields being higher and higher and higher. So gold's being pretty resilient. It's pretty bullish stuff. And I think you just have to wait for that period where, okay, yields have peaked a bit, you know, we're going to have a retracement, or maybe something fundamental happens and, you know, there's a bit of a crash somewhere, system breakdown, whatever it might be. And people say, okay, that's it, they're going to cut rates, or the rate increases are definitely off the table. Or, you know, when you have a pivot, if I can say that, then I mean, gold just squeezes up. So as long as gold can hold up pretty well whilst rates and the dollar rises, it'll be just, you know, building up this explosive coil for the pivot moment. So although it's clearly going to go lower if we have continuation, I still think it's pretty constructive and still relatively strong. That's gold. Let's look at silver. Now, silver, not bad, right? Again, way off its highs. That's because of the Fed, you know, the market action after the Fed decision, the dollar yields, but still, relatively speaking, pretty good. So let's just see how low they go with the dollar and yields. I think they will go lower, but it's all about holding off support. Now, remember, silver should be very strong coming into this ascending line, coming just above 22. So it'll be interesting to see what happens as silver nears the low 22s, let's say just below 22.50. And when gold starts to go lower back down to 1900, do we start to flush? Or do we have fake flushes and hammers and breakouts? And does silver help gold? Let's see. But I do expect a bit of continuation lower tomorrow. Well, otherwise, it was looking so good for gold and silver, especially the miners. Now, think about it. Gold and silver were basically flat. The market was down. Dollars up, yields are up. That's a recipe for red miners. But the miners were up. Now, not much. They were up more. But again, the miners are very strong relative to everything I just mentioned. The GDX just perfectly tagged resistance at 30. You can see it's still closed below this descending, but it's looking for that excuse to pop. But I don't think we're going to get it. Not yet. I think we're going to go a bit lower. Unfortunately, the day will have to be postponed until yields start to drop, until the dollar drops. But, you know, despite the market being down, we were green. Despite gold and silver coming all the way back down and unchanged or even red, we're green. So this is waiting to go up. It's underpriced, let's say. It's cheap. So it's very constructive. It's good to remember for the day that everything turns and pivots. But yeah, I think it's very impressive. So, you know, will we go lower? We should tomorrow if we have continuation of what happened towards the end of day. But hopefully we can hold. And then when we break out of this descending, bam, we just squeeze up. So GDX, very impressive, despite only being up 1%. The technicals are working. GDXJ, not as impressive. I can understand that because when you're under pressure, the more sensitive one loses more. I mean, it's green, got to give that, but it's not the best candle, is it? It's just the show is postponed. So back down you go. And, you know, probably will visit 34 if the dollar and yields keep rising. So, but otherwise, same sort of lesson drawn as GDX, very strong relative to the metals, relative to the markets. And it's something to remember when the pivot happens. So very good. There were some individual names, you know, Newmont. I don't want to stretch this video more than I should, but, you know, Newmont, look at these candles here, look way stronger than the relative to the ETF. So Newmont, Barrick, Agnico, sorry, that one. Agnico and Newmont, two of my favorites. You know, very, very decent candles. So some of these seniors are really outperforming. It's just they're going to have to follow the ETF, the general miners, and, you know, they're going to have to follow the metals and the dollar and yields ultimately. So, but lots of positive, constructive stuff in the gold and silver miners the last couple of days, not just today. But, you know, it is what it is. You have to pay attention to the markets, yields, and the dollar. Finally, Bitcoin, not the worst day. It's holding off quite well. But I think as the market drops, this thing is going to come back down too, along with the Nasdaq. So I'll leave it there. Today was obviously very important. It's Fed day. Tomorrow is very, very important because you have probably the real digestive mood. A lot of the times you have these moves and then the next day they reverse. So tomorrow for me is the real market reaction to everything that was said today. I do think we're going to have yields. I don't know if they'll continue up, but I mean, continue up tomorrow, but basically they're going to keep going up. The dollar's going to keep going up. And I think the commodities will go lower, you know, all of them actually, because even though some of them don't care about the markets and yields and even the dollar, like oil and uranium lately, those two are overextended, so they'll go lower. But the metals will be sensitive. So generally speaking, market's going to go down. And I think that's very important. Let's see how everything reacts to that. It's the banks, it's everything I've already covered. So I'm not going to repeat myself. I hope that was useful. It's getting interesting. It's always been interesting. Every day is pretty exciting, but today was exciting indeed. All right, good luck.